The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Welcome, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us, folks. We have the Dow right now down 33. NASDAQ off 11. S&Ps are off 6. You got gold getting smoked out there, down 30 bucks. Silver's down 92. Oil is down 218. Bonds are up 31. King Dollar is going to basically destroy that whole market. She just rejected the lows out here again. She's at 82.36. And, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You see the banner on the top, on the side. You can test drive it right here, right now. They'll put $25,000 of funny money into. And, of course, don't forget, each and every day, Darrell has his own program on. It is from 1 to 2 Eastern Standard Time. Outstanding program. Darrell and I are going to be up in the Boston area. Nadex is sponsoring a workshop. It's May 11th, folks. If you'd like to come to that workshop, it's 4 hours of great education. It is a free workshop sponsored by Nadex. It's right on the front page of TFNN. Darrell Martin, what's going on, brother?
Hey, man, how you doing?
Well, hey, we need some action. We need some action here, baby.
Hey, we've had it, man. We've had it all morning.
Here.
Come on now, yeah.
Come on now. And, folks, if you're watching TFNN, if you're watching Tiger TV, what we have right up here is that we have Darrell's box spread scanner. So, first what you want to do is this. Go over, open the account with the Nadex. You can test drive the scanner, and we're going to be working with this baby right now. Okay, so what you have, well, first off, the market right now, folks, is basically, to me, it's a trader's market. And specifically, the reason being is that you're at swing points. And when you're at swing points, it's just a beautiful thing. And in the case of the NASDAQ and the small caps, bottom line is that they can't handle higher price. The dollar, and this is, to me, this is where one of the plays are in a huge way. Dollar index right now continues to basically come into the low, reject that low, and your confirmation is on the other side with gold and all the commodities, by the way, not just gold. You know, when you look at the commodity market out here this morning, you get silver down 3.5%, gold, crude down 2.5%, copper's down 2%, gold's down 1.9%, gasoline's down 1.7%. I mean, you know, it's screaming that this dollar wants to go higher. So it's going to be interesting watching the whole. Yeah, it's wild, isn't it, man?
Oh, it is. Okay, check this out. I was looking at this, and I haven't been able to find it, and I'm not saying it doesn't exist.
Yeah.
Okay. But I haven't been able to find this happen before in history. So I'm literally going back through years, and I went back like 20 years so far.
Okay.
We had 14 days in a row of up-down oscillation alternating closes.
Okay.
Like we just broke that pattern because it's trying to see if it can get through it. But if you pull up like the SPX,
yes,
you can actually see how it goes down, up, down,
no,
up.
No,
like
I'm with you. What I'm trying to think about is that at any one time, I do remember, and this is what's really cool, folks. At nice highs, meaning longer-term highs, that's exactly what you do get. You know, so I'm trying to just think back in general. You know, if there's been more than 14. But if you already went back 20 years, I guess that, you know, there hasn't been. Because at the highs of 2007, that happened a lot, man. And it happened 2 or 3 times in a row. Meaning it happened, then you pull back slightly, then you went to highs again, then it happened, and you pull back slightly, then you went to highs again. Do you know what I mean?
Oh, and I saw a lot of that. And I was going through, and I was like, man, this is, you know, I'm like, because usually you see 2, 3, 4, but then all of a sudden, like by day 6 or 7, I'm starting to wonder what's up, you know?
Yeah, no, totally.
And so I start looking, and then all of a sudden, I mean, we just kept going, and 14 days, and, you know, I was like, well, maybe we broke out of it over here, you know, on the 9th, but we didn't really break a new high.
Right.
So I'm like, well, I'm not going to count that. And then the 10th, I mean, then it really broke out, and I was like, okay, well, at least it stopped the pattern. But that's, you know, obviously some major hesitation. They're having a hard time finding buyers above the market.
Yes.
I mean, that's what's going on. You know, because
that's right.
I mean, obviously there's always buyers and sellers, a buyer for every seller. But having a hard time finding buyers above the market, and you got that 1 day pop, and you really didn't have anything significant yesterday. I mean, it went up a few points or whatever, and then today, I mean, it just dropped right back down. And I was watching, you know me, I'm always watching for the gaps. They actually popped a little fast. I mean, I wasn't able to grab any of them. But a couple of, I mean, they're not working. So a couple of them did go up and, you know, filled as far as what I consider a gap fill.
Yes.
But the S&P and stuff, I mean, like I got all the charts up right here.
Well, and we're looking at them right now. And what's going to be interesting here, folks, is that you can expect high volatility basically all day long today, you know, and the market's not really off at all. I mean, you get the Dow down 25, which is nothing. The comp is down 9. The S&Ps are off 6. But I'll tell you, man, you watch this as we start coming into the close, because, see, what we had last week was this. You had the S&P on a reversal week, which doesn't happen a lot, folks, okay? And now investors don't pay attention to that, but traders will pay attention to that in a huge way. So what I suspect most of the people that trade a lot are looking at out here today is that, will it even hold the highs? Now, the S&P only has to come back about another 10 points from where it is right now, and that would be the second week in a row that it couldn't handle it. Well, and what's so interesting about this is that the probability of that is like so small, because when you have an up week all week as we did, in order to reverse on a Friday after an up week, it's really hard to do. I mean, you know, that the probability goes with that you'll have an up week. You know, that you won't just reverse on a Friday. That's what it comes down to. So.
Right. But yeah, I mean, it's trying.
Oh yeah, no, it is. No doubt, no doubt. I just wanted to,
yeah,
there's no doubt about it, man. I mean, I'll tell you, this commodity deal is something else, man. I mean, it really is, and.
I mean, you already got, I mean, oil and stuff. I mean, it's done a couple deviations this morning.
Okay.
So,
okay.
I mean, just flying on down.
Yeah.
So you got some major moves. So that's at a point right there where you're looking at like 97% of the expected move for a day has already taken place.
And you know, yeah. So right now, this contract's down 221, and it's going to be interesting if we get enough volume. It's going to be close in the volume. Well, it can do it. Well, it's going to be, let's see, it's 10 o'clock.
Yeah, it's going to be pretty tough to keep pushing on that.
Yeah, because we're at 111,000. And what happens, folks, is that it would need more than 260. But, you know, bottom line is this contract's running for $89 anyway. You know, so.
Oh, yeah, I think, I mean, you give it another day, we're there.
Yeah.
So, but, yeah, I mean, check this out. I got the deviations up I got right here on the chart.
Okay, cool. So tell us what we're looking at. That's oil deviations. Okay, cool.
Exactly. So, you know, it's basically I'm pulling the implied volatility out of the oil contracts off the CME.
Okay.
And so we're using basically all of the market's participation buyers in the options.
Yes.
To let us know basically how far do they say the market's going to move. Because that's the people that are trading anyway. That's the ones you care about.
Right.
And you can see how I popped down to one deviation. That's about 70% of the time you're going to stop at one deviation.
Okay.
And so right there, you can see how it did stop. I mean, it stopped at 5:30, and it stayed there really until 8.
Yes.
So it spent 2.5 hours right at that one deviation mark. It dropped down to 1.5. So it spent another hour hanging out right there.
Yep. Building cars, baby. Unbelievable.
Yeah. And then right there, boom, right there at 2 deviations. Stop there, and now it's been an hour right there. And you can see we have a lot of volume right here.
Yes.
And, I mean, down bars and up bars both. I mean, just, you know, falling down, but we have a lot of volume happening. And so at this point, you know, it sort of looks more like the guys who were shorting this market down have started buying up their contracts.
Right.
You know, so basically they're closing out their positions.
It's so much money, exactly, man.
Yeah, they've made a ton of money this morning. It's you know, it's basically it's extended that probability move. And, I mean, it could. I mean, if it was going to go the next deviation right now, I mean, it'd line up with exactly what we were talking about. We got it right here, 89.98.
Yeah.
So there's, you know, 89 would be one more deviation if we were to get down there.
Oh, man, folks, if you happen to be driving in your car, we got to explain what Darrell is looking at right now. No, seriously, man, because what happens, folks, is this. That third deviation is also the swing point. See, I love it when you get a couple different tools. You know what I'm saying? You get and you know that a third deviation move is almost unheard of, right?
Oh yeah, I mean it's basically like a 0.3% chance you're going to get that go further than that.
And because in one day we're talking, folks. That's the daily deal. Yeah. And so see the way you can use that, folks, which is really cool, is that if in fact you did get that and you happen to be bullish, I wouldn't be bullish oil, but you know it's a market, okay. So the bottom line. Well, you wouldn't even have to be bullish. If you're bearish, that's what you do. It's definitely better close it there because you're going to get a heck of a bounce. You know?
Yeah.
Yeah,
it's one of the, and what I use them for, my number one reason for using them, I mean, the number one reason I use them is for taking profits.
Yeah, totally.
Or tightening my stops.
Totally.
And so what I do is, and this is, we post these, of course, every night. But let me make this a little cleaner, a little easier to read. There we go. As soon as a bar closes below a deviation level.
Yes.
And I use 10-minute bars. You use 10-minute bars, same thing.
Right.
So right there, as soon as it closes below that deviation level, I'm right above that high is where I'm going to put my stop.
Nice.
And what it does, it gives me room to let my profits run.
Yeah. Right.
And it gives me an objective price point versus my emotion and my account balance and my P&L.
Exactly.
And so I'm letting the charts tell me what to do. Because, my profit has nothing to do with what the market's doing.
And what's so neat here, folks, what Darrell's doing is that if you get a counter trend bounce where his stop was in the first place, meaning above that level, folks, you're going to go a lot higher. It's not just going to be a little higher. So don't ever worry about that, I took my stop and then I'm out of it. What happens, folks, is that when you get those counter trend moves, if they can get above after some real destruction, above even the first bar, hey, they're going to go for a good move. Because what happens immediately is that if the folks that were short the position didn't close it immediately, as soon as that starts climbing up, man, they're going to start hitting that keyboard, man. There's no way they're going to let all that profit basically disappear, so.
Yep. And you can see, like, right here, if we were following this the entire way down, that's what you'd be doing. It's like that close below.
Right.
Close below, close below. So each time that happens, I'm tightening that stop, and it's just very helpful. And so that's the number one way is tightening my stops for basically letting my profits run.
Yes.
But the other way is exactly what you just said. Is if I'm going to fade a market, if I'm going to be a contrarian trader, which
right,
us traders love to be contrarian traders, right? So I'm going to make it break that point. So, and sometimes I might get a little later than I want to, but it's a lot better than getting in earlier than I should have.
Totally.
And one of my mentors taught me one time ago, he's like, I always would rather wish I have something I don't as have something I wish I didn't.
No, that's a fact, man. Yeah.
And so basically,
wishing to get in versus getting out. Yeah, exactly.
Yeah, it's like I'd rather wish I would have got in versus wish I wouldn't have got in.
Yeah.
And so that basically, and it saved me on so many trades. Because, man, I'm like, dude, it's going to hit it, it's going to bounce, I'm going to go. And then all of a sudden the thing does become a 3-deviation day.
Right.
And so by doing that right there, it allows me to, sort of gives me some discipline.
Well, you're going to have to, let's pull up gold for me. I want to see what as soon as we come back from this break, folks, we're going to line up selling the euro inside that Nadex platform.
Sweet. Yeah, it bounced right off one deviation perfectly. A euro did this morning.
The euro did. Okay, I think it's ready again, man. I mean, the thing is set up really sweet right here. See what the euro had done, folks, on a daily basis. It basically, it got up to that 130, 189. It's right at ice, man. And I just, it's like the counter trend move could have been a little bit more, but I think it's done again. This is Darrell Martin, Tom O'Brien. You stay right there, folks. We're coming right back. We ended out down 30, Nasdaq off 12, S&P's off 6.5. Gold's going to have a tough time, folks. We're down 32. It's going to be down a lot more than 32 before it's closing out today. Yeah, it's a high volume spike down at 1525 right now. We're going to be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling out here with us. Right now, we get the Dow off 32, NASDAQ off 13, S&P's off 6.5. And, folks, if you do happen to be in the New England area, you know, you want to put price and volume together. You want to put time in the trade together with Darrell's outstanding tools. Come on up. It's May 11th, 8:30 until 12:30. You're going to get 4 hours of great education. And we will be sold out, folks. We launched this one pretty early, so we're still about 3 or 4 weeks away. And bottom line, though, if you want to be there, come on. We'd love to see you. So, Darrell, let's take a look at your analyzer here and see what we can do with this euro. I want to sell the euro, you know, and see what the best trade. And this is where this scanner comes in, folks, because, well, here, let Darrell explain to you what the scanner actually does, because this is crucial to understand, and it's time-saving, but mathematically it's going to give us what the edge is when I am going directional. Well, it doesn't mean you don't have to go directional, but my point is that you'll see how this works out. It's really cool.
Basically, what it does for you is it takes all the spreads, and there are a lot of spreads in Nadex.
Right.
They have over 2,000 contracts trading every day, 2,000 unique contracts. So as you can imagine, that can be a bit overwhelming. And
slightly.
You know, when,
yeah.
So when you're ready to place a trade, you do not want to go through and be now. I mean, on a single market, you could be looking up to 28 contracts at once.
Right.
Okay. And, there are little tricks, you can use to narrow stuff down, like, it expires in 10 minutes. That's not a good one for me, things like that. But still, let's just say you narrow it down to 6 of them. You still got to go through and do all the P&L calculations and everything else, and as soon as you're done with one P&L calculation, the other one P&L calculation has changed, right?
Right.
Because the market's oscillating constantly. So with that, what I did is I was like, I got to make this simple. So I went in and basically had somebody build for me an entire live database feed that would pull up the spreads and make it really, really, really easy for me to do the trades. And it basically pulls the live data from the Nadex exchange and just, makes it overall very, very easy.
Right.
So with that, let's go ahead. Let's talk about your Euro to USD setup. What do you got?
Well, what I'd like to do is this. On a Friday, what happens in the currency market on a Friday in particular, folks, okay, I really only got to have until about 11:30 Eastern time for real movement. We can go to 1 o'clock, whatever, but I want to sell that euro at 130.83. So I want to find what would be the best trade on Nadex to do that.
Okay, well, let's pull it up and see. All right, so here we go. We got Euro USD. And so right now we want to go short on the euro.
Right.
Okay. And we probably want at least, let's just look at everything that's on there right now.
Okay, cool.
We'll check it out, limit it out, and go down here to the...
And if you're in your car, folks, what we're looking at is this, is that it's a analyzer, and inside that analyzer, it's visual. This is what's pretty cool here, okay? It's visual, and what he's going to basically be able to do is put in maximum risk, maximum reward, and it's going to tell us how much we're risking, where the maximum reward would be, and what the time limit is. And that's what's really important, because what happens inside this analyzer is that you can actually pay the same amount of money and actually get more time. It just happens to be that it's a better spread, because we're doing a spread. I'm not doing a binary, folks. I'm not saying it's going to a yes or no bet. I'm going to do a spread bet. When you first get on the Nadex platform, I can tell you flat out, you're going to want to do the binaries, okay? It's like, but you really want to go to the spreads. And what the difference is, folks, is that the binaries, you're flat out and out saying, okay, it's red or green, it's yes or no. Where the spreads, your probability of being successful goes up dramatically. This is just how it goes. And if we listen to Darrell's show at 1 to 2 Eastern Standard Time, what you see, what Darrell specializes in a huge way, is that when announcements are coming out, and he'll set up 2 separate spreads, which is just so cool. It's amazing, because all you need is volatility then. That's how this comes down.
Yep. And I actually had a USD yen straddle on this morning.
Oh,
for the news.
that's sweet. Yeah.
So it went down. Here's the beautiful thing, like the binaries. If you go in and you try to strangle the news on this, because I trade the government news all the time.
Okay.
And basically, if your profit target's not hit, it's a total loss. Okay,
right.
So I'll go and I'll buy a binary above the market.
Okay.
I'll sell a binary below the market. Now, I'm getting out early.
Yeah.
But it's a total loss if I don't get hit. The spreads, I got to break even a lot if I don't profit. Like this morning, I got out at a small profit on the trade.
Right.
So
you stay right there, folks. Darrell Martin, Tom O'Brien, we're coming right back. And by the time we come back, folks, gold is going to be down at 15.25. They're going to smoke this, baby. Ooh. Light them up, baby. We're coming right back, folks.
We'll find that euro-dollar spread.
Yeah.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. And, you know, we were just talking about that gold market in 3 minutes going to 15.25. Well, it just went to 15.16. Folks, if you are counter trading gold out there, I'm telling you something, right? Number one, you shouldn't be doing it. But if you are doing it, you better have a stop in, because you're going to see something in that gold market that you've never seen, okay? Not that you've never seen. I've seen a lot of markets. A fast
some 100-point
market.
moves.
Listen.
Oh my gosh! Look at that right there, right below. I mean,
oh
bam.
yeah, it's folks. It's serious business. The reason it's serious business is is that you're going to have a liquidation event, number one. But what happens is that the folks that are in that market are in a lot of commodities, and all the commodities are getting smoked. Okay, this is going to be a big flush out, and I'm telling you that 1,500 probably will get smoked today. Okay, it's the bottom line. Forget it. No, there's no support. Forget the word support in the gold market. It's not.
When you passed 3 deviations, you ran out of support.
Yeah, there's no support. It's not even there. It's not there. It's not there, folks, because what you have is this. Okay, is that you have two separate ABC structures on the way down that are saying 1450 with volume. It's like, okay, and gold can do it, you know, in one day. Okay, it's particularly on a Friday. You know. I love the gold market. I can tell you I love it, but I'm telling you something. Unless you've traded a lot, okay, you better not be near that thing right now. And, you know, just save your money and get near it when it's down at 14.50, 14.30, and then no one's going to want it, and you'll have a field day, you know, so.
Or trade it on Nadex.
This is a perfect segue. No, that's a fact. And what Darrell's talking about, folks, is this. Now, if you're trading on Nadex, and that is absolutely the way to do it. Okay, because you have a defined risk. And when we were just a commercial, folks, what happened is this: there was no trades between 14.27, 15.27, and 15.16. None. And so the way that works, folks, is this, is that there were no buys. Now, anyone that is in the market moving money knows that as soon as there's no buys, guess what? There's no buys all the way down, folks. So now what the game is going to be on a Friday is that those people in the pits right now, forget it, man. They're going to push this as far as they can push it. So let's go back over to my euro, because my euro is setting up really nice right now. And so what happens is this, folks. The reason it's setting up nice is that I'm at a nice little swing point up here. You know, the first leg down in the euro this morning went from 130, 120. It basically spikes down to this 130.44, and we're at 130.91 right now. And that, yeah, I know I can go to 130.99, but big deal. That's 8 ticks. I can take 8 ticks to take, you know, by another couple hours that I get down and I get 20 or 30 ticks on the other side, you know. So that setup to me is a nice reward versus the risk that's going to have. Now, and in particular, this is why too, which is really cool. When commodities are getting smoked like this, folks, it's not if the dollar was going to go. The dollar was going to go. You know, we got gold down 51 right now. Gold's going to end up being down $100 today, man. This is going to be a disaster. This is going to be an absolute disaster, man. Because you got to remember something, folks.
Better hop on Nadex, start taking advantage of it.
I tell you, this is, and even if you're playing those counter trend bounces, you definitely want it. Look at this. Now it's down $54. Oh man, this is going to get on the record books. This is sad. Sad but true. But this is what building cause is all about, folks. See, we're going to see 14. We might see this A to B equals C to D today. 1450. Oh my God. And so now watch how this works, folks. What you're going to see is the, let's see. We're going to
stay out of the market with the futures. You will get smoked on the.
Oh yeah, it's not even close, man. It's not even close. It's like over the top. Oh, look at this. We got our man Rick from British Columbia. Let's talk to Rick. Hey, Rick, what's going on?
How are you doing today?
I'm doing great, man. How you been?
Oh, really good, thanks.
Good, man. Good to hear from you.
If you ever look at a gold stock, I just thought I'd mention that. I'm actually going to ask you about the euro, but I just got to turn you down a little bit first here, if I could. PVG. My son he's been up there 7 times. It's north of us. It's a vein. They've had assays of 1,000, and this is not, this is not a Briax here. Like 1,000 ounces per ton in certain areas, right? It's vein. It's not a huge area, but
what's the symbol?
PVG.
Oh, T as in Tom, P Paul,
P Victor George, and they're actually mining it right now. It's isolated. They don't even have a road into it right now, but there's a guy that worked there for 25, 30 years, and he says he's never seen, it's so rich. So I just told him, I said, it does have volume at the highs, but I said, you probably get $10 or something out of it. But it's getting hammered like the rest of them. I think it'd go down to $5 before it's said and done. But anyway, I just thought I'd mention that to you. It's called Pretium.
Yeah.
See that big doji there?
Okay, but you say they're getting gold out of the ground, but they still they haven't taken any money yet. So.
Oh no, they're just starting out here. This is a virgin operation kind of thing. I mean, they got a big camp up there. He's been up there 7 times. He's second year plumbing apprenticeship. Goes up there with sheet metal and da-da-da-da-da. But like, there's lots out there. I just thought I'd mention that one to you.
Well, all I'm saying, Rick, is that when I'm pulling it up, it's not saying that they have taken anything out. I mean, they have zero.
No, they're just starting. They're just starting.
Right,
I actually seen rock go down. They got these great big nylon bags, and the helicopters, take it out. and then drop it on trucks, and then I don't really know where they ship it to get smeltered, but anyway, you know, your euro.
My euro?
Didn't I hear you just say it, or your?
I want to sell the euro.
Oh, no, I don't. Hey, you know what? I'm not disagreeing with you, but I
think... You can disagree with me. That doesn't mean anything. That's all right.
I think we can still get a bounce to 133, that little high sitting up there, and I think we're just getting a little pullback. And don't get me wrong, I'm bearish on it.
Listen, it's possible. It's possible we can get there today, man. I mean, right, you know, what you have
here, it's about where you take the profit. It's not about where you get in.
Yeah, it's, you know... see, right now, folks, I'm telling you, folks, you want to be trading this market right now because this is a trader's market. And what you do, and what happens is it's a two-sided market. I mean, and it's either the euro is moving, the bonds are moving, the S&P is moving, the dollar is moving. You know, and when you have that
gold
many
is
things,
bouncing up and down 5 points like
exactly
right now.
Exactly. You know,
I heard yesterday Cyprus is selling all their gold.
They're selling 400 million.
Oh, is that what it is?
Yeah.
Okay.
Yeah.
But anyway, Tom,
I'm sure they're elated today. So.
Yeah. But anyway, I noticed it on the dollar too. But yeah. I'm just saying, there's still a chance this euro, even though we're pulling back right now, and I think we're going to pull back Monday because we have volume today. But you look at the head and shoulder pattern on the euro, which takes us all the way back down to the lows to around 120. But you know. I just think we can still get to that 133 level because there is kind of a high volume high up there. You wouldn't disagree with that, would you?
No. I mean, see, what he's looking at, folks, is that what Rick is expecting is he's speculating that the euro's are head and shoulders, so he wants to see that other shoulder come into being, and that other shoulder is that 133, right?
But anyway, I just thought I'd bring that up, and you know. So anyway, that's all I really have to say on that one right now. You know.
Well, all I have to say is that King Dollar's where it's at, and the euro is trash.
And I'd like when you guys have time, and when you have time, and I've kept looking at WFC because I knew earnings come out today, and I seen on a weekly it was a false break from $36, and I'm just curious where you think WFC might be a buy for a bounce.
35.
Right. False break on it.
Yeah.
35.
He's talking about Wells Fargo, folks. Wells Fargo's a good-looking chart. Yeah, you know. 35 is the number because I like how Wells Fargo's set up for that March 15th, the spike actually higher. That's a decent spike up there, man.
Yeah, I kind of expected that today, but it didn't happen. All right, well, thank you very much.
Have a great one, man. Have a safe one. Come on, hey, Darrell, we got to get this euro thing off, man.
Well, let's do it.
Okay, so give me which one I'm going to do.
Okay, so what's your target price right now before the thing's gone? What do you got?
It's 130.88, and I expect that what I'd like to get within, you know, a couple hours, that I can see 130.62. So I get 26 ticks. Now that doesn't seem like a lot, folks, but in the future market, $6.25 a tick. So it's a nice little trade.
Yeah. Right here we got multiple choices. Let's go ahead and take this. I'm guessing all the way to 3 o'clock.
Yes.
Okay.
Yeah.
Well, we got different ways we can lay it out. I like to go for the lowest break-even distances I can get.
Yes.
Because you got a little premium in there, and I really don't want to be giving up the money along the way.
That's huge. That's right.
And my biggest goal on Nadex, more than anything, is to basically lower my leverage. The next benefit is, of course, to avoid getting stopped out.
Right.
So it depends upon which one you choose. So we got one right here that is a sell at 30.87. It's only 3 pips to break even. It's basically a $100 max risk. Now that's if you had no stop loss. Okay.
Okay.
Going all the way to 151. Make $151 on it. So meaning you're basically putting up about what is that? 30% of normal margin. So that would save you quite a bit of money right there.
Yes.
And then we got one that's 2 pips away. It's basically a $40 risk to a $50 profit. That one expires at 12 though.
No,
those are really the two spreads that expire. So all the other ones really don't have the risk reward in place that you want. So your best trade is going to be that 29.35. That's one of the things I was talking about on the show this week, is how to use these markets to simulate the underlying market, basically to mirror the underlying market. Now, you could also hedge it off.
Yeah, that one doesn't work for me then. See, watch this, folks. Watch how this works. Because that even if I should speculate that's where it's going, I don't like the amount of money I'm putting up versus what you're getting, because in Nadex you can see, well, we do this enough, is that you can put up a lot less money to get a lot more money. So
now there are some other trades lined up, but you're going to have to give up. I mean, there's one like you have to give up 15 pips.
No,
so
listen, we can go over to the. Let's go over to the NDX. The NDX is going to do an ABC down right now. We'll switch gears.
Okay, so you want to go to Nasdaq?
Yeah.
Okay. Yeah, I don't. We can check them out. I'm usually hesitant on.
I know you don't
spreads.
like Nasdaq. See, I like.
No, I love Nasdaq.
No, hey, okay,
that's not accurate. I love Nasdaq.
No, you're right. Actually, no. Let's do this. Let's do the S&P. I understand what Darrell's
it's the
talking
spreads
about.
that I don't like.
I'm with you. What Darrell's talking about, folks, and this is a great education to understand this, is that the spread on the S&P is much cleaner, meaning you're not giving up as much as you're giving up into the Nasdaq. So let's go into the S&P.
Yeah, because the spread takes in 0.1 on Nasdaq, it takes in a whole point on.
Yes.
I mean on Nasdaq. So I avoid Nasdaq, silver, and copper. Those
No,
are the
I'm
three
with you.
spreads I
So
avoid.
let's go to the S&P, because it's going to be a disaster, folks, the rest of the day. It's
all right. So we got S&P up right here. Okay.
Yep.
And we got a variety of spreads lining on up. It depends upon which one you want to do.
Okay, I got a target price right now. We're at 15.78, and I got a target price at the close of 15.68. So $10.
Okay, so you got
10 bucks from where we are right now. What we're doing, folks, is that we're breaking a B point of an ABC down right now. So the A point is the 15.90. Your B point is 79. Oh, that's 21 bucks, man. 21 bucks off the high today. That's 60. Yeah. Oh, you're gonna love this, folks. That's 68. It's lined up. It's lined up perfectly, man.
Okay, so you're gonna have a couple different choices. If we're gonna look at the spreads,
yeah,
then you're gonna go in and you gotta, for your 10 points, you got basically a 1-to-1 risk reward right now.
Okay.
You can't be stopped out of the trade.
Right.
So that's the 1550 to 1590. That's a few ticks off of a. Let's see, the S&P. We also have
1550 to 1590. That's not bad. So what happens
here we go. Actually, here we go. We got a 1555, 1585. That's a lot better.
Yeah.
So
what you want to do, folks, is that you're trying to get the see the 85 where it's 77. That's the one. Nail that, baby. Okay. So what happens, folks, is at the top of the box is at 85. So what ends up happening is that we're putting it on now. If it comes all the way down to the end, great, I make that money. But as long as it stays at the 1577, I'll probably give up a point here. Or lower, bottom line, you still get your bread back. This is where this gets really interesting inside the spread structure of what we're doing here. Oh, look at
there we go. Yep.
Yep. Amazing.
Going down right there. We're going right down. Notice how it bounced off 0.7, right at 0.7, coming right down, right now into 1.
And what Barrett's talking about with 1, if you happen to be in your car and not watching Target TV, is that you're at the first deviation level. And gold
look at
is
that, 2 deviations. That's right where you're calling the next level, 1564.
What a trip that is, man.
I'm telling you, man, they're insane accurate. It's what the market says the market's going to do.
They are. You stay right there, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. And, oh, boy. Gold's going to break 15. By the time we come back, folks, gold's going to be in the 1400s. You stay right there. We'll come right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here, folks. You stay right there, because we got our man, Mr. Basil Chapman. He's been growling and prowling with all the Tigers and Tigresses out in San Francisco. He's going to be broadcasting live from San Francisco. The bottom line is that, does that say that? Hold on. And what you do have, folks, is no doubt this gold market is a heavy scene. And I would not want to be John Paulson right now, because we're down $58 in the GLD. I mean, $5 in the GLD, and he owns 21 million shares. But that's nothing compared to the rest of his portfolio. So it's a heavy scene, folks. There's no two ways about it. And bottom line is that it's not over, and it's not going to be over. Period. Okay. What you're going to see is that you're going to see this 1,500 get crushed out here today. So It's early in the day, folks, and what you do have is this, is that when you're this early in the day, inside the commodity market, and you're down this much, people are not going to go home long, period. And what the broker-dealer community are going to make sure that they basically get positions closed out, or margin money comes in before they go home. And that's that hasn't even occurred yet, folks. You know, I'm sure they're either closing accounts right now, or they're on the phone for longer-term people saying, okay, are you going to wire the money in? It's going to be in the next half hour. You know, so there's a real mess out here. There's no two ways about it, man. It's a wild one, baby.
Dude, it's a crazy wild day. These commodities are just off the charts, man, off the chain, like everything. So, I mean, you got oil right now. You're right, man. It's pushing on down. It's going for that 3-dev.
Yeah. And it's a correlated market, folks, okay? Well, it's just like us. I mean, you know, I like trading all those things. And if you happen to be on the wrong side of them, folks, and you don't close them immediately, you know, there's a problem, you know? And depending on how long you've, been trading, sometimes you do and sometimes you don't. You know, but when people that are in them, they're in them. Look at this gold, man. This gold is just edging down there. And it's like, oh, man, you got to be kidding me. And silver, folks. See, silver is an ABC down to 25 bucks. And we're still $1.30 above $25. And silver's down, what, 4% right now. I know. So,
yeah.
It's...
How far down do you think this the Dow's going to move on down today? That thing's going right now.
The Dow... top line number is no doubt that's the one that's been able to hold up. When I take a look at the Dow right now, I mean, can it get to let's see, we're at 815. That'd be interesting, man. Once you're under, let's see, 14,785. Well, it's going to 785. It's not that much more. I don't think the Dow will actually fall apart until we actually see the NASDAQ down about another 20 points. The NASDAQ down another 20 points, the S&P down 10 points, the Dow will fall apart. And, that S&P trade, folks, to me, that, we're 1578 right now. We're going to see that baby get down and close at about 1568. It's going to give back everything from the spike up of 2 days ago. Because you should see this bar, folks. This bar, if you happen to be in your car, we took out the swing point with 99,000 contracts, okay? Bottom line, 99,000 contracts, big money. Big money. This is Darrell Martin, Tom O'Brien. You stay right there, folks. We got our man, Mr. Basil Chapman, coming up next. Then we're going to keep you healthy with Nico and Paige. Then, of course, right back to Dallas, Texas with our man, Mr. Darrell Martin, Dave White.
You know it.
And we'll be right back here. Have a great one, folks. Have a safe one.